Good morning, traders. It's 8:02 a.m. Chicago time on Tuesday, the 1st of June, 2021. Welcome to June. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Just a quick mic check, if you can just double check to make sure the sound is nice and clear. Windows does this thing where it just constantly messes with your microphone settings. I'm going to dive right in while I wait to hear back from you into the conversion trading pre-market summary sheet. A little bit changed, a little bit improved. This morning we have completely risk-on posture. We've basically opened at the low of the overnight session. Now remember, I remove all of the trading that occurred from yesterday's session that would otherwise be RTH. So we're deleting all the trades from our analysis between 9:30 Eastern and we'll take it all the way to 5 p.m. Eastern, although we closed at 1 p.m. Eastern. We remove that data and just use what happened Sunday night all the way through till now to define our high and our low. So essentially, the overnight session opened at 41.91.75 and has done nothing but to rally straight up. So the market condition is trending up. The volume is 184,000 as of 7:54 Central. About 10 minutes ago, currently at 186,000. Overnight inventory in the ES is long 80%. We traded a little bit below, we spent a little bit of time below the 4,200 close from yesterday yesterday at the open. So the overnight inventory is 80% and the range is 36.5 points. Low to high. And remember, the 1 sigma range for the S&P, or the boundary of what we would consider normal for the overnight session for the S&P, as it shows on this thing here on the pre-market summary sheet right in here. Of course, it would help if I had a better color. Let's go to blue. Blue is you. So right here, you can see that the edge of what is normal is 44 points in the S&P, currently 36.5, but the mode is 31 points. Again, we have 36.5 currently for the S&P. So wider range than what we would expect. Well within 1 sigma, and that 1 sigma includes all the pandemic stuff. It goes back 252 days, so we can get a big enough sample. Notice also the rotations have been changed. The rotations have increased for some, decreased for others, and what we would consider to be the normal daily range is listed right there for the 5 key products or most traded products. So risk on sentiment for today. We have Hewlett-Packard after the close, a major tech company, and overall, not much more to talk about. I actually did not update this headline here. Apologize for that. And tonight at 9:45 Eastern, we have the Caixin Manufacturing PMI for May, which is a major number. But overall, cryptos are up. The indices are all higher. Crude oil's higher by a lot, popping higher 3.45%. And we have silver and gold going higher, copper coming off, and so on and so forth. So that's where we stand this morning. As we come into today's session, we do have risk on, and we are opening in a gap higher than the prices we've had over the last few weeks. So we're coming into a session with risk on sentiment, and we got within 4 points of the RTH high and about 10 points of the full session high. Full session high is exactly 10 points higher, 42.38 and a quarter. The overnight high is 42.28 and a quarter. So that's where we stand. Again, volume 188,000. We consider 190 to be the most common. It can be up to 350,000 and still be considered normal. Okay, thank you. Tsai Shin. All right, learned something today. I love it. So that's where we stand. In terms of what was expected on Friday, this is where the different color comes in. In terms of what we expected on Friday, we expected it to attempt to push higher. We were opening above the prior day's RTH range. A small attempt, a weak attempt to push higher, but expected it to get down into 99 on Friday and finish somewhere in the middle. So we expected it to kind of hold this area between 17 and 99 on Friday. Here's what actually happened in our review segment. Here's what actually happened on Friday. We opened at 12.5, pushed to 14, and then dropped to 06, pushed back to 13.50, and then got down into 02.50 before the IB was done. We went and breached the IB high at 15.50. Made no sense for me then to break down into the OS low and fall and break the other side at 42.01. So again, we expected the range to be between 17 and 41, 42.17 and 199. So this is scenario one, but a tough trade in my opinion. I'm going to call first. Excuse me. So we had a profile that was relatively balanced. Complete non-action. We did have a holiday yesterday. We're coming into the holiday, so this is a little bit expected. So we didn't get to 21 up here. Didn't get to 21, but we ended up taking the 42.14 single print and staying below it for most of the session. So that's where we are. So here we have a neutral day, a neutral normal day. On Friday, basically a non-event. Since then, again, on my charts, you'll notice that the trading that occurred in between the open, what would normally be the cash open yesterday till the close yesterday at noon Central, 1 Eastern, that's gone. And what we have today is a market that opened at the low. So the low print is basically the opening print, and then we have pushed straight up. This is an imbalanced day, pushing straight up with a point of control near highs and a market that is holding near highs, well ahead of the full session VWAP, well ahead of the full session mid, and above and beyond Friday's range and the range of the last few days. So to me, this is quite bullish, which, by the way, once we put in that low last week, I had warned that we are likely to push this all-time high. So last week was actually pretty tame, pretty crappy trade, really. Not much to last week. Look at last week's range. Remember, each one of these boxes, gray boxes, dark or light, represents 1 week of trading, and each change in the shading of these boxes represents a month. So this is the month of April. This is the month of May. This is month 5. We're about to start on month 6. And you could see that although we put in a higher low, higher high on the weekly, so we have one-time framing up on the weekly. We had one-time framing up on a daily every day last week, and we just could not get away from this 4,200, and we ended up closing at 4204, 4204, which is the point of control of the week. So 04 is important to pay attention to, but we are well above it by 20 points, and we are well within reach of the 42.32 and a quarter. So sell in May, go away, not quite happening yet. I don't believe in those adages anyway. Every year it's a little bit different, but we are trading above last week's range, just below the full-time high. We're sandwiched in here, and today is likely to be an interesting day because we're opening out of balance after a big rally up on what is basically, let me see, currently 80% long inventory. So overall, it's looking like we are out of balance. And what we have to test for this morning is, do we get a responsive seller back into 15.5 and 10 below with the point of control at 04, or do we get a small pullback from 24 to 20, let's say? I know we have a gap and go situation. If we have a gap and go situation, in other words, if we open, I'm going to draw this on here. Let's say we open at, let's choose the current price, 25. If we open at 25 and we pull back, and the prior day's 15 is right here, the range, and we end up leaving that open, then returning to the open and squeezing through the OS high, then I'm looking to get long any pullback or breakout consolidation. What does that look like? A breakout consolidation looks a lot like this. So we have a push. There's your push bar. Let's consider that an impulse bar. Here's the consecutive inside bar. All of these are inside bars. As soon as it starts to take out this inside bar, we're looking long, and we're aiming for the all-time high at 32. So how is that for giving you a lot of information and a setup? But if it tries to pull back and it's not able to and crosses through the open, then I'm gonna, Convergent Trading members will see in the Head Trader channel, we'll see caution shorts. Shorts are off, and we're going to look long, and our target is very obvious, up at 42.32 and a quarter and 42.38. 42.32 and a quarter is the RTH high, and then the 38 quarter is the full session high, and those become the key targets. 4 points of a stop, around 4 points of a stop. And so we're looking for, in that situation, we're looking for 2R and 3.5R returns on risk, which is very important that we have a positive return on our risk because we got to pay for our losses. So that's what we're looking at today. It's a lot of detail. In terms of what the order book looks like, let's hop on over to Edge Pro X. Looking at the order book, we've basically had size in blocks, so in larger blocks, so about 150 out of the 346 or so is a single lot. We have these at the strikes, 42.35, 42.30. We had one at 25 that kind of ended back here somewhere. We have one at 20. Let's scroll down to 20. We had one down here earlier at the 20. Gone. The book is fairly nondescript. See, I'm scrolling. There's not much here in terms of real firm liquidity. There's some on the sell side, and then 42.50 has a lot of liquidity in it, and 42.55.75 above. So looking at the full depth of the order book tells us that there's really not all that much in terms of let's remove all the fluff, and we could see here where this stuff is resting. Okay, so that's where that stands. Let's move on and look at what's expected for today. Here we go. So we've reviewed the big picture. We've reviewed, in the composite. We've looked at what it has accomplished so far. What has it done? And what it has done is it has consolidated very nicely. I mean, call May what you want, but overall, you have a month that was very technical. May was very technical. You could see from the trader bites throughout May that, scenario 1 or scenario 2 pretty much worked out every day except for maybe one. Very, very technical trade. And what we've done is we've created this consolidation over the last week, and we are breaking above this consolidation up here. So this is important to note. We have a point of control near highs. The market is stagnant up here near highs. It is waiting for the next move. So the primary scenario is responsive selling, mainly to balance inventory and to check to see where our prior range is. Again, the last high, RTH high, is down here at 15. I'm not expecting that to fill. I'm looking for it to push through, break the 28.25, and push to the all-time high at 32.25. 32.25. So I'm looking for that to break pretty good. I'm looking for a spike through the 32.25, come back, consolidate, potentially pull back, and then later grind our way into the 38. Grind our way to the 38, and then we have a measured move plus the 1 vol of sigma up here at 42. Looking for it to bust through the 42 here, potentially into 45 or so, something like that, and then to come back into the close, to bounce out into the close. So we have a trending up day, and that's a huge clue. Secondary is an open that pushes the 28.25, almost gets the 32.25, fails with a lower high, and what that'll likely do is create an impulse that brings us back down to 15, which was last week's high, and then into the full session VWAP at 14 and 42.10, consolidate at the 42.10, and basically rest up here in the gap, setting us up for a run tomorrow. In either case, we're likely to get a higher low, higher high. The one-time framing up in the weekly is strong, and so it'll be for the day. It was for the daily as well, and that's likely to continue into today. So don't fight this. I know there are many top pickers. As they used to say in the pit, top pickers get bloody noses. And so this is you want to trade from the direction that the market is obviously facilitating, and what it's facilitating is buying, as you can see here. So the big area to pay attention to, 42.10 below. 42.10. We have 15 and 10 below us. If the 10 doesn't hold, then we're likely to move into 42.04. 42.04, which is right here, 04. Okay? That becomes the big area to test with this low. I need to change my rig here. The camera's in the way. But anyway, I'll leave you with those thoughts. Good luck today, and I'll catch you tomorrow morning. Convergent members, don't forget, we have our monthly AMA at 1 Eastern today. Instead of our trade talk today at 1 p.m. Eastern, our monthly AMA. I'll catch you in there. Take care.